Right. Jessica, welcome to the Vertical SaaS podcast. Delighted to finally be doing this one with you. I know we've bouncing it around last year towards the end of, but yeah, excited to have you on the show.
Yeah, no, thank you so much for having me.
Yeah. And to everyone listening, welcome to another episode. On this podcast, we explore the journeys of founders, software leaders, and industry experts building vertical software. And today I'm very excited to be joined by Jessica Chen-Riolfi, the co-founder of a Fintech software company called Uprise, an AI-driven financial advisory platform for small business owners. And Jessica, before we dive into your journey as an early stage founder, learn from your experiences in scaling startups and your kind of unique insight into the fintech market, it'd be great if you could, I guess, give us a bit of a proper introduction. You know, I always love to find out how people get into tech or get into their vertical. You're like a serial product builder. I mean, would you kindly kind of introduce yourself properly, as I say, and maybe take us back to that moment or time in your life where you really got into tech and, yeah, kind of set you on this path?
For sure. Yeah, so high level first, I'm the co-founder and CEO of Uprise. Uprise is embedded financial advisory for small business owners. We cover a lot of topics around tax planning, cash flow, business funding, stuff like that. Very generally boring topics, I would say. So I think your question is, how the heck did I get into this stuff? Um, Yeah, I mean, I've had I've listened to some of the other podcasts that you've done, and I think similar to other folks had a sort of winding journey where you don't really know where you're going to end up, but it's this path of listening to yourself of like warmer, warmer, colder, colder, and over time you find your place to where you feel like you're in the flow. And so that's kind of been my journey. I started out on Wall Street and didn't know that I wanted to do tech. I had, like everybody experiences tech in different ways in their life, but the real moment for me was I was like, I gotta get out of Wall Street. I like this is not for me. I do not. Interestingly enough, I was like working at JP Morgan. I was like looking upwards at the bosses, and I was like, I don't want to be them. I don't know
Yeah.
if any of my bosses or former bosses are listening to this podcast, but basically, I was like, I don't see myself doing sales. And then fun, here I am like doing sales like 15 years later or whatever it is. Um, but I was like, I got to get out. I applied to a bunch of random jobs on LinkedIn, job boards, stuff like that. And I very, very randomly ended up at eBay. I just threw my resume in many different places. But then the moment I moved to Silicon Valley, the moment I showed up to work in jeans, the moment I had team members who were super chill, it was like no going back for me. So that was my first journey in tech, and then sort of have gone deeper into product, into fintech specifically, and that's really evolved over time.
It's interesting the kind of experience you describe on Wall Street. There's a really famous clip. Robert Downey Jr. spends like half an hour in an investment office in New York, and I can't repeat any of the stuff that he says in his feedback or review of brokers in Wall Street, but you should YouTube it after this, and anyone listening, it's very, very funny.
Okay.
But and then kind of go from that to eBay, and then like seems like super quick, and I think that's one thing I like to talk about in the podcast. You know, I run a recruitment firm called Zanata, and I think progressing, it's super hard to get promoted, but I think it's not super hard to work out how you can get promoted or why people get it, but for someone like yourself to seemingly really rise very quickly, not just at eBay, but at TransferWise, at Earning, at Robinhood, you seem to assume those roles pretty quickly. Like, was that again the product of your environment, being in San Francisco? Do you think? And yeah, because just such an interesting transition from investment banking.
Right, that's right. Yeah. It's interesting that you frame it that way. Um, that's right. So like after I left eBay, did my got my MBA, And then afterwards, TransferWise, I was responsible for the Asia region at TransferWise, was head of product at Earnin, which helps people who live paycheck to paycheck. And then I was the chief of staff to the head of product at Robinhood before starting Uprise. Um, for me, I don't know if it was, this is the journey of like listening to like warmer, kind of thing I was describing, which was like, I really like solving problems, and I get a little bit I don't know what the right word is. I was like, I need a bigger challenge. I want to take on more stuff. And so I think it's true throughout your career where you say, oh my gosh, there's this, for example, at Wise, there was this international expansion, had this, they were growing super fast internationally, but the website was all in English, which was
Right.
holding back their growth. And like, I was like, that thing needs to be done. I'll do it. And so it's just a matter of sort of like raising your hand, taking off a really big complex challenge. And I think especially in startups where there's like a ton more stuff to do than people to do it, it really gives you that opportunity to just go solve it. And when you go solve it, you are also building confidence in yourself to solve an even bigger challenge or take on the whole
Mm.
region of Asia, right? And continue on from there. There we'll maybe get into this a little bit later, but one of the things that I think about is like, am I outside of my comfort zone? If the answer is yes, then I'm probably on the right track.
Yeah, I think that last part is where I'm always measuring myself. How comfortable am I in life generally and in work? And if it's not feeling uncomfortable, then it's probably you're not pushing.
Yeah.
But yeah, no, really interesting. I guess like before we move into more Uprise, the product, how it works, the kind of aha moment, etc. Like big tech lessons again, people that kind of come from places like eBay and big fintech scales like TransferWise and Robinhood. Like, do you think there's key lessons that you learn from those companies that when you go on that journey to found your own company that you really take with you? Is there like one or two things that really stood out for you?
Uh, why TransferWise or Wise was a very formative. I still have difficulty with the name. It was
Sorry.
a very formative experience for me.
Yeah.
You may have heard about them. They have an incredible culture
Yeah.
of giving people a lot more responsibility, but then associate with that, a lot more ownership and people learning quickly from their mistakes and being able to pivot very quickly and continue and build fast, right? And so that's something that I have taken with me to everywhere I go. And I think fundamentally, like now that I'm a startup founder, it's impossible to fully prepare yourself for everything.
Yeah.
But over time, as you sort of evolve in your career, you pick up these things that you really believe in, and that then goes on to define, how you build, how you treat your team members, all this kind of stuff that, looking back, you're like, oh, this makes a lot of sense. But I don't know if it's necessarily in the top of my mind of like, oh, I'm bringing this from here and this from there. It's just like, gotta
Yeah.
solve it. Let's figure out how to solve it. Yeah.
Yeah, it was 4 years into the journey at Uprise, so as you say, it's more retrospectively you look back and you think, oh yeah, I've really did learn a lot, and
That's
it's
exactly
kind of
it.
good to
Yeah.
look back. But so product consultant at Robinhood, again, for people that are, there'll be lots of people that listen to this that are early stage founders or software leaders that are probably thinking, tinkerers thinking about doing their own thing. Like for you, providing AI-driven financial advisory and tax planning for small business owners, before jumping into that, like what was in such a dislocated market, I'm sure you can tell us a bit more about it, but what was that aha moment, leaving Robin Hood's product consultant into founding the business, like, yeah.
Yeah. I think for me, the taking the leap to start a company. First of all, like I'd worked at incredible companies that you just mentioned, where I had the privilege of working closely with founders, and in
Yeah.
many ways, that's cool. But on the flip side of it, I also realized that hey, these guys are very much human, and so it started. I think over the course of working with a bunch of startups, it was like, why not me? I had never thought that I would start a startup. I remember, like, if you talk to any of my
Really?
friends from 10 years ago, they'd be like, oh, she's not going to start something. I was very vocal about how I didn't want to start something. And, but like, you work in enough startups and you're like, actually, no, why not me? This isn't rocket science. I have incredible experience working on the guts of like the financial systems throughout the world. Like, um, let's give it a shot. And from my perspective, always motivated by other women founders who came before me, or other women leaders who came before me. And I thought that, hey, no, I'm ready. I'm wanting to, like contribute, my own contribution here. So that was one piece of it, was like personally getting comfortable with the idea of founding something. And
Yeah.
then the other piece of it, which is like the idea was very much from Robinhood, sitting at Robinhood and hearing that users, the number one question that comes up on Robinhood is like, okay, what do I do with it? What do I buy? Like, how do I make the right decision for what I should do on the platform? Um,
Right.
and was, in all of this sort of inputs, like, um, seeing machine learning take off. At the time, it was still like, when I was still ideating on this, it was still machine learning. It was before OpenAI was huge. And it was like, it is possible to solve financial decision making. And that continues to be sort of the North Star of what we have, which is solve financial decision making. You're trying to make a decision for what you should do, X or Y or Z, or this other thing you maybe even haven't thought about. You should be able to know your specific situation, all of the inputs, and be able to say like, oh, this is the right answer, to your question. And so that's kind of the direction that we've been building in.
Why do you think, up until now, or up until Uprise, something like this has been ignored? Because when we talk about the the market cap for small business owners in the US, I mean, it's got to be, I don't know, like 100 billion addressable market for putting into a dollar value. I don't know, but maybe again you've got that. But is it because traditional software, maybe prior to Gen AI, couldn't provide this level of advice? Is it, yeah, like interested to get your insight there as to why nothing's existed pre your idea?
Yeah, I think it does exist. So it does exist in very small pockets of like traditional advisors and accountants. So sometimes accountants might add advisory or outsource CFO services. Sometimes financial advisors might partner with accountants. So it happens on a small scale in a very traditional sense.
Right.
But I think we're definitely the first tech company to really get into this. And I would say a lot of this, gosh, traditionally it's because small business owners have a lot of complexity. And the complexity I'm talking about is that personal and business finances are intertwined for a small business owner.
Yeah.
You cannot, right? Like, in order to get a loan for your business, more often than not, you're like looking at your personal credit score and getting a loan on your house, or vice versa. How much money you have, personally speaking, is a result of like how much money you take out of your business. And so, like, they're one and the same. But then the challenge is that's like exponential complexity versus if you just look at the business by itself or you just look at the personal finances by itself. And so I think traditionally speaking, that's kind of, if you just walk into a bank, you can kind of see on one side you've got like the commercial people, and on the other side you have the personal people, and they don't
Yeah.
really talk to each other or understand each other's worlds, which is just not a good solution for small business owners. And so I think for us is really, with technology, being crazy enough or confident enough to lean into that complexity, to try to give advice on both. And so I think that's maybe the pivot point where, or the turning point where, hey, technology is at a point now where it can ingest a lot of complexity to be able to make sense of it.
Yeah. And you're kind of ahead of the game, because before the Gen AI unlock, you've already started this, and then Gen AI comes out, and then you must just be thinking, amazing. Now we can, like,
We do even
like
more.
talk me through the kind of tooling behind it. Is it off the shelf, or are you kind of building stuff from scratch now, or?
Yes. We built everything from scratch. We didn't
Okay.
want sort of anything legacy, as we were building a lot of the tooling and the AI into our processes. And so as any startup, I think we started first very manually, just doing things manually, like responding to an email, putting together a PDF plan. But then over time, you do enough of these. I think now we've done thousands of financial plans, and being able to take all of that data to be able to generate the result before, like a draft, before a human comes into it and just, makes minor tweaks and sends it off to the customer. So that is essentially what we've built in the back end, both a full-on CRM for our advisors, to track their customers and their workflow, as well as a recommendation engine to be able to match the right recommendation to the right customer, the right response to the customer's question, et cetera.
Because I'm 12 months into my journey as a vertical software recruitment firm, and you're right, the balance between business finances and personal, the past 12 months,
Yes.
I can't even look at it. But this kind of thing, I'd imagine maybe exists in the UK, but it's just not something that I think up until the Gen AI unlock we could really take advantage of and rely on it as advice, because we can train it. Like, how are you first of all kind of training it in the data that it needs to know? You're partnering with big banks, with big financial bodies.
Yeah, so maybe to cover the second part of it first is, we partner. We're an embedded company, so we partner with a lot of the vertical SaaS companies that you guys talk about, to offer this advisory sort of as a premium tier on top of their products. So they maybe have banking, lending, payments, whatever, and then a premium tier with advisory for small business owners to really help them, the small business owners, make sense of their financial situation, figure out what they should do. But a lot of that is helping them take advantage of the products and use the products that are on the platform in the right way. And so that, I think, has been really great for us. Like, partnerships in general has been really great. And then bringing that back to your original question, we've been, as mentioned, been able to now, for a company of our size, serve thousands of customers, and have done thousands of plans. This data set didn't exist prior to us building it. The data set, essentially what we're trying to do with the AI is say, for this person's customer profile, this is the right recommendation. You should do an S Corp election on your LLC, for example, right? To be able to make that recommendation, we need lots of inputs of customer situations, recommendations made, and then also thumbs up, thumbs down from the end user as to whether or not that was a good recommendation, if it resonated with them, if they implemented it or not, all this kind of stuff. And so that's the feedback loop, right? And so we're able to now know that, hey, recommendation, good or bad, allows us to get even more relevant with these recommendations over time. And so that's how it continues to grow and get better.
To evolve. And playing devil's advocate, what if, so in the UK, for example, financial advice requires qualifications, clear distinctions between advice and selling, and transparency about lender access. Like, is it the same in the US? Like, is it fair to say that they have to have a qualification to be able to provide advice? Like, and are you partnering with all those types of brands that are registered, I guess?
Of course, yes. No, I've been in fintech for long enough to know that that's just part of the part of what we do. But I think fundamentally speaking, it comes down to, are you doing the right thing by the customer? You're not like trying to sell them snake oil or whatever it is. And so I think as long as you keep that as the baseline, like do the right thing for the customer, then in general, you're pretty compliant with regulations already. For us specifically, we have a subsidiary basically as a registered investment advisor, so we're subject to investment advisor rules, because sometimes we do look things that you might not think are securities are actually securities. Say if you own stock in your company, for example, then that is a security. So things like that. We make sure we are compliant there, and there's a lot of privacy rules. We handle a lot of customer data, so of course that is really important for us to make sure. So we're SOC 2 compliant. We're making sure we're just doing the right thing in terms of protecting customers' data, not selling the data, that kind of stuff. So this is what I mean, right? Like as long as you're doing the right thing by the customer, you're likely on the right side of the regulations.
Yeah.
Maybe one more thing I'll say, which is we don't surface anything AI generated directly to the customer.
Right.
Everything goes through one of our CFP advisors first before it goes to the customer. So everything is human reviewed, by a licensed professional before it goes out.
Yeah, and that was kind of my thinking as well. Was kind of my next question. What if it goes wrong? Like, as an embedded AI product, my insurtech brain kicks in there, being a bit of an insurance geek, and I'm like, who insures you for that? Do you guys insure yourself? Is it? Yeah, but then you've got the human in the loop to probably prevent that from happening.
That's exactly it. And so, at least from an insurance perspective, we fall under traditional E&O insurance and this kind of stuff that we make sure that we have that covered as well.
Yeah, yeah, and to do all of this, build such complex products at the pace of innovation requires your venture back with some of the leading investors, but and again a very dislocated market. The team behind that is so important to help you do that. I always think it's interesting to get a bit of insight again for early stage founders, and I'm kind of going through it myself. How do I start trying to even find a co-founder? What does that process look like? How did it kind of evolve for you?
Yeah, it was a lot harder than I expected it would be. But now looking back, I'm grateful that I took the time to find the right
Yeah.
person or the right people because so I have two co-founders.
Hmm.
Chris is responsible for product and ops, and then Nantha is responsible for engineering. And
Hmm.
so the three of us, founded this together. It, they always say there's only so much. One of the things I think about founding anything is like there's only so much you should be listening to sort of like best practices and this is how you should do it.
Hmm.
Everybody says, at least from finding a co-founder, that you should work with somebody you've worked with in the past, right? But then the challenge is that I worked at Wise, and all of my potential co-founding people were all in Europe, and I'm in the United States. And so both it's a matter of one, finding people who are ready to take the leap at the exact same time that you are, and then two, align on so many other things of geography and whatever else, idea
Hmm.
that you want to work on, etc. Um, and so I was lucky to join this group called On Deck. I don't know if you've heard of it before, but
Yeah.
community of people who are at this. It removes the barrier of like, are you looking to start something at the same time? These are all people who are thinking about starting something, and it was through that community that I met Chris, and then we met Nantha actually through just posting on LinkedIn, and he came in, and so like I would say like many of the things that, us coming together as a founding team, things that they tell you not to do. And yet we are now 3.5 years in and I'm so, so grateful to be working with these
Mm.
guys. And also the early team that we've assembled as well.
Love that. And like again, it's very obvious to assume people's roles at these stages, but again, it's just more insight. People that are thinking about starting at the earlier stage and taking on the role of CEO founder. Like, what's your role? What's your day to day? Everything.
Yeah. It over the course of this journey, it's been everything. I've like
Yeah.
done pretty much everything. Um, Today, so I mainly work, I mentioned what Chris and Nantha do. I mainly work on partnerships.
Mm.
So working with our partners, talking to prospective new partners, and really sort of pushing pushing the tip of the spear in terms of, okay, what could our product do? What could it do for potential partners and what they need, and sort of coordinating with the rest of the team, depending on what we hear from our vertical SaaS partners.
Mm. And kind of again, just going back to the Uprise business, 3.5 years, 4 years into the journey, like what's been the highlights? Been the highs, the lows? If you could kind of recap on the past couple of years, I guess, and what's exciting you for 2025?
Yeah. Gosh, there are too many to think about. I mean, I
Humble
feel like in
brag.
one day I've had my highest high and my lowest low. Um, We started as direct to consumer, right? Initially, because
What
of
did
my
you?
Robinhood experience, yeah, we had thought of a similar type of customer as Robinhood,
Right.
for sort of millennials and W-2 income. And I think what we realized over time was like the pain point's not deep enough yet for them to take a chance on a brand new startup.
Right.
But what we saw through launching on our product hunt back in 2021 or early 2022 was actually our biggest channel, and we saw a bunch of small business owners come through. Uh, and they were much more engaged, much more willing to sign up, and they were also an older set, so they had kids, they were married, stuff like that. And we were like, wait a second, we're all of I think it's one of the hardest things to realize that, some of the things that you believed really deeply, it's actually wrong. And you should do this other thing because the market's telling you that. But then simultaneously, it's also an incredible feeling to see then a subset of people really adopt your product and give you incredible feedback. And so I would say that journey of like finding small business owners, really going deep in terms of understanding, what they need, has been some of my highest highs and lowest lows, and the related fundraising journey along figuring that out.
Yeah, and was that post investment from the VCs, or was that pre that you kind of pivoted?
So we raised our pre-seed round on our original consumer business,
Yeah.
and then realized actually, hey, this isn't quite working. Hey, but there's this other audience, small business owners. Then we had to retool a lot of, we built this recommendation engine, retool a lot of it for actually small business topics
B2B.
before we then raised our seed round last year off the new business.
What's your thoughts on kind of like being venture backed? I mean, you seem like you guys have raised a few rounds, fairly modest, and you've really worked with the resources that you've got. Again, switching from the Robinhoods, the eBays of the world, that can't have been easy, but it seems that you guys have really worked with not limited, but yeah, like you've found really strong product market fit, you've pivoted. Like, what do you advise on, or what's your kind of thoughts on venture? Because we talk about it like it's quite glamorous, I think, and
Yeah.
once we secure money, like, I do it. As a recruitment company and consultant that's constantly looking at who's raising what. I feel like it's kind of my obligation to report some nice rounds in the vertical SaaS market. But sometimes I do think it feels like it's celebratory, and actually that's just the beginning. And is it the right decision for some businesses? Like, did you always know you were going to be venture backed, or did you think about bootstrapping or angel investing? Or
Yeah. So I want to say, so yes, we are VC backed, but I want to say like not half our round in terms of dollar size, but half around in terms of like investors has always been angels.
right?
More than half around has been angels, and they have been. I love. Working with angel investors. They are incredible. They're thinking about the business. They're supporting with their networks. They're cheerleaders along the way. And so highly recommend, I think, in whatever industry, having angels alongside the journey. We did always think we would be venture backed, and the main reason is because our product doesn't exist, right? Like what we're talking about right now is like we're really trying to build something that is brand new. There is a lot of complexity, there is a lot of tech being built, but hey, if this works, we think we can really change what finances mean for small business owners and really, take a load off and just help them outsource the whole thing. That's the long term vision of it, and so that vision and what we're building towards matches with sort of like the outcomes that VC funding would ask for. And so I think it's a matter of like thinking about like what do you really want, or are you willing to take that chance, are you taking that risk, and aligning that with the funding that matches that. But I think maybe one thing that's been different for us, which I don't know if our VC investors necessarily appreciate, is that we've been slow to spend. We are very conservative with our spend because, to your point, we want to make sure, like before it makes sense to pour marketing dollars into something, it makes sense to prove that there's something to pour marketing dollars into. And so really like iterating, listening to customers, figuring out if there's a there there first before scaling up. And I think that's kind of, the point at which we are now, which is like we've gone through 3.5 years of just staying deep in the product, staying deep with users, staying deep with the market, before really scaling up. And I don't know, back in 2021, it was a very different game where it was just like spend all the money and raise in the next 3 months. Yeah, so different world back then. I'm grateful anyway for the approach that we've taken, to weather us through that.
I think even still something that rings true with a lot of conversations that I have is like, what's the goal for 2025, or at the beginning of last year, what's the goal for 2024? And it's a lot of it was still go fast. We're not going fast enough, and I sometimes just wonder, like, is it about going as fast as you possibly can, or is it about going 1 inch wide, 2 miles deep, and spending longer down there? And but it's I guess it's the cash flow. It's so unique to every situation. But I do think there's a lot of emphasis put on the pace and how you should do things as quickly as possible. And I think it's quite detrimental to a lot of businesses.
I think, for me, I think it comes back to, it doesn't need to be spending a ton of money, but it is, are you learning as fast as you possibly can? And right, because like when you're just starting out as a company, especially a VC-backed company, you literally, all you are is a huge list of hypotheses. And so the faster that you can prove or disprove hypotheses, the faster you're able to get to where you need to go. And that is certainly something that I wish we could have moved faster. I continue to think we need to move faster. The faster, the better. So that's kind of how I think about the pace that we work.
And how quick was from the idea with your co-founders to finding product market fit? Like, what does that process look like for you guys, and how quickly did you validate that?
Yeah, so many experiments. So as mentioned, we were direct to consumer for about a year at the beginning. Lots of experiments there, lots of different growth channels that we tested, stuff like that. And then Product Hunt ended up being the biggest growth channel. Small business owners ended up coming in through that. And so sort of 2022, back half of 2022, was really building that product, building the small business product, building our partnership go-to-market motion. So that was basically through 2023. And then we raised our seed round to start scaling up, closed that beginning of last year, so about a year ago. So now it's been, okay, now it's like repeat, rinse and repeat. So it's different. I would say the answer to your question is that there are stages, there are different chapters in terms of what you do, and there are different things within that chapter that you're trying to iterate on really quickly.
Yeah, and as you look into this year, what does year 5 or kind of 4 going into 5 look like for Uprise? What's the focus?
Yeah, 2025, we've got a bunch of partners. So we have a bunch of partners already live. We have multiple pilots running with some pretty large partners, some public, some sort of like, the stage right before that, late stage venture back. So we work with, in general, like, banking type companies that work with small business owners, or vertical SaaS for different niches of small business owners. So that's our focus. We've got a ton on the roadmap to build. Continuing, like we're doing a big overhaul, like a usability overhaul of our admin tool. So all of these things are just, we know what we have to do, execute on it. That's the goal for 2025, and make these happen.
And again, as someone that's just generally well connected, is just before we're kind of finishing up here in the time, but not so much predictions, but what more so trends. Like, the focus is very much in fintech. Embedded finance is a big one. More decentralized aspects. There's many kind of areas of innovation in open banking. But where are you kind of seeing where the real opportunity to create new value in the fintech industry is coming from?
Yeah. I think I've been really surprised at, so just doubling down on the partnership side of things, how well partnerships can work.
Yeah.
I'm a product builder, as you've mentioned. So I've always been like, oh, I can build it. We just like build it ourselves. But now I've realized that actually, this is maybe natural. When you specialize, when different parties specialize in different niches, it makes the end product that much better. And I've been really impressed with how well partnerships have worked. So I would say my prediction would be like more partnerships, and especially if we can get some really like wild out of the box type of partnerships going in fintech. I think there's some really interesting ideas there. I don't know if it's like fashion in fintech or something along those lines. I think that'd be really cool. And honestly, the biggest weird partnership in my mind was it's now just standard, but travel and credit cards is this
Yeah.
partnership that is really tight. And like, why does that necessarily make sense? But now it's like a foregone conclusion. Of course, if I'm going to get a credit card, it needs to have travel benefits. So I feel like the unique ones are the ones that are going to break through.
Yeah, well, we'll see if some of them ring true. We'll get you back on next year to see if any of those come. There's a little kind of anecdote at the end. I think we've had a lot of great takeaways for founders, for people trying to progress their career, but we've kind of those annoying questions where someone says, if you knew something now that you knew back then, what would it be? Or one piece of advice that you've always stayed true to and it's kept you on course. Like, do you kind of have anything there to leave us with?
Yeah, I mean, I think the interesting thing is that advice changes. We've said this, right? Like best
Yeah.
practices change over time. What was
Yeah.
best practice when we initially launched in 2021 is certainly not best practice now. And so I think going back to fundamentals, sort of like I think the piece of advice I give is like the fundamentals matter, right? Like when you're building a business, revenue matters, profit matters. And so just keeping an eye on those things, making sure that you're building a business that has value, that is able to generate revenue. It's very obvious to say, like keep that as your North Star. And I think you'll end up in a good place.
Beautiful. Great way to finish it. Jessica, it's been a pleasure. Thank you for joining me, and look forward to catching up again soon.
Yeah, thank you.